All right, Christian Tharp, welcome back to Benzinga's Pre-Market Prep. How are you doing today?
I tell you what, I am doing great. Thanks for having me, Aaron. Always love being on.
Of course. So let's get into some charts and some stocks. What have you been watching? What have you been trading?
Well, I tell you, obviously, I believe this week is our lovely FOMC week, correct?
Yep,
Yes,
tomorrow.
Yes. So for us in our little trading universe, a lot of chatter around that. And like clockwork, what I always try to do when you talk about charting is, a lot of discussion about, what's going to be said, rates, all that kind of wonderful stuff, the statement. But what I started doing about 3 years ago, I started kind of showing on my screen, on my charts, showing how actually the market tends to tip its hand, before an FOMC, probably 80-90% of the time in what it plans on doing. Certainly not perfect, but take, for example, if you go back to the FOMC statement, the most recent one, which I believe was on the 12th. And if you take a look at the on the 12th, we obviously got a nice pop, but look what was going on the days before. Okay, market had pushed to a new high. The S&P had pushed to the new high there and was consolidating above that high. And the day before the little jump, you can see the little gap higher there. The market had kind of started to push higher, closed toward, right there, closed towards the high of the day, and then jumped right there. Exactly. So what I've done, what I always try to do is show everyone, as you start planning your trading week going into an FOMC, more often than not, obviously, as you guys know, I don't tell you guys, technical analysis, just like fundamental analysis, just like any other analysis, doesn't work all the time. But I've been keeping track for about 3 years now, and I'd say roughly, again, 80-90% of the time, whatever the market said it was going to do the day before or the week before tends to be what it does on FOMC day, almost making the statement itself a moot point. So what does that mean for us this week? Well, we had been following anyway, a nice little channel for the S&P, the SPX. We've been following here for the past few months, ever since the low that had been put in. You can go back to, right around, mid-April where the low was put in. And it's been a nice little channel for the S&P. S&P broke out of that last week. All right. So we look at that breakdown. Again, favorite phrase that I always like to use: markets reserve the right to change their mind. Okay. It doesn't mean technical analysis failed. Technical analysis doesn't fail. Part of the definition of it is it's just setups. It's just probabilities. It's just blah, blah, right?
Yeah.
So if the market sends us a signal that it plans to do X, it does reserve the right to say, I'm the market. I do what I want to do. But you can kind of see, you can kind of visualize there, nice little channel breaking down last week. Typically, these aren't 1 day or 1 week type of events. A lot of times you can see some more movement to the downside. So that's our expectation as of right now until the market tells us something else.
And Christian, it's not even going to be about the Fed really this week, because so many big earnings reports coming that are really going to dictate the move. Tonight we get Microsoft and AMD. Wednesday we get Meta, Qualcomm. Thursday, Apple, Amazon, Intel. I mean, this is going to dictate the next move. What do you think about the setup into these earnings reports? Like, let's just go to Microsoft first of all. It's sold off a bit. I mean, at least we're not, going straight up into the report. So maybe the bar is a little bit lower here. What do you think about the setup going in Microsoft's report?
Yeah, I mean, I did like the nice little turnaround. It kind of turned around on Friday. Looked like it wanted to make the move higher. We kind of watched this area around 4.25, and it did take that back yesterday. So it kind of looks like it wants to recover a little bit. Obviously, as you know, the space has taken some hits here. The NVIDIAs of the world, all the big names, all the ones that have been carrying the S&P. Like if anyone has looked at the S&P and say the NASDAQ versus the Russell, the Dow, the NYSE, for about 6 weeks there, the latter group couldn't go anywhere. But the S&P, NASDAQ, and all those big names that you just rambled off were the ones kind of really leading the charge. Those are also the ones that have been taking the hits. So certainly there's a case to be made for a recovery into these earnings this week. But you're absolutely right. Big earnings. We're watching SMCI is a big one that we keep an eye on. We're watching the 700 mark in particular.
Yeah.
The stock has made it to that area a few times. This area you can kind of see right around that 700. It keeps holding. dips a little bit below, manages to hold, barely closed below it yesterday. So we're kind of watching, not only because of, whatever goes on with FOMC can send things kind of this way or that, but those big earnings you mentioned, we see a lot of these names as well. But
they're going to report next week.
All of them.
Going back to the overall market here, Christian, I mean, at what point does this dip in the S&P 500 like indicate a new trend to the downside versus just a pullback? I mean, right now it looks, just looking at the chart, like a pretty similar pullback that we saw, like you mentioned, back in April. Then we ended up moving higher from there. What cues would you be looking for that, like, okay, this is going to be a sustained downtrend, now the trend has shifted, versus no, we're still in this bullish channel, this is just a pullback, as we often see?
Gotcha. Always the $1 million question, right?
Yep.
Exactly. So you go back, we're watching multiple levels on the way down. Certainly we always have to pay attention to things like the 200-day moving average. We have to pay attention to things like that. I tend to focus more on price itself, that whole price is king mentality. And so as of right now, having broken out of that channel, again, unless the market sends me a message otherwise, it did so at the same time it had weakening momentum on the way up. So it was kind of saying, hey, look, we've had a great run since April. Let's take some healthy profits. When you look at what happened in the market and you look at that rotation, it looks like a healthy overall bull rotation. So I wouldn't think, no matter wherever this terminates, I wouldn't think it's putting the bull market in jeopardy in any way. End of July-ish tends to be seasonally, can be a little weaker, so seems to be normal right now. You start breaking things like the high you just mentioned from the previous pullback. I think it was 5, 6, 7% back there, right around you can call it 52.50 area from that old high, from that where we pulled back there. I wouldn't want to see us fall back below that. That would be a little bit of a concern to me. Certainly 10% is that psychological mark for the market. So I wouldn't want to see things like that get down. Otherwise, we are simply looking at this as a nice, hey, look at that nice, great 3-month plus run. You can't go up forever. It's healthy, seeing a little rotation. But areas we wouldn't want to see, again, is you look at that old peak from back in the April area. I wouldn't want to go back below that. And there are other trend lines that we're watching, but right now I wouldn't make a big deal out of it.
Got it.
Sam wants to know IWM too, just while you're doing the indices, if you could do us a technical breakdown the IWM, because it looks a lot different.
Oh, for sure. Well, yeah, exactly. I'm glad he pointed it out too, because if you look at the IWM, you pan out a little bit. Okay. So really pan out on it. Not just, I know a lot of people like to, I always advise that kind of top down and really pan out and take a look. Follow the IWM back at the 210 area. And I want everybody to clear back to 2021. Okay, so you want something like a 3-year type chart. You're going to see this area around 210. That was not only an important support area back then, that once it was broken, that's all she wrote. It was resistance multiple times in 2022, and then again here in 2024 on the way up. As your listener just pointed out, nice little breakout, and that's that rotation we're talking about. Dow took off, NYSE took off. Ironically, watching now the NASDAQ. We look at the 100, the NASDAQ 100, and the S&P declining. So we've seen that big rotation, that big change, and that difference. Everything about the Russell and the IWM looks great here. I can't imagine we wouldn't expect higher prices. And I think you start looking for things up in the 230 to 240 area. Again, referencing those 2021 highs. If you pan out, it looks somewhat more obvious versus if you look too close. So you took out that 210. We tried once before and failed. Now we're firmly well above it. I'd be thinking pullback, however far along it goes. Obviously, the Russell doesn't seem to care, right? Doesn't care at all. Holding on great. I would think once we get rid of some of this weakness in the S&P and the NASDAQ, you're going to see Russell challenging those highs.
And then any individual names, Christian, you're watching? I know you mentioned SMCI. We had a couple chip stocks report earnings. I mean, big week for earnings. Are there any setups that you like heading into reports this week?
Right. So one of the big things we do when you have this big week, as a matter of fact, this week here, there's a couple weeks like this that are our favorite weeks of the year because we can play on the volatility. So we do a whole lot of playing on both sides. It's something we love to do when we know volatility is going to spike, as you have referenced. A stock in particular, so let's say we forget about earnings for a second. Tesla looks great. Obviously, not a thrilling reaction to the earnings, but you'll notice last week it was consolidating right between 215 and 226. For like 2 or 3 days. So if you zoom in on roughly a 5-10 day type chart, you'll see that little consolidation. Earnings, not thrilled, right? Or some healthy profit taking, who knows? And you'll see the drop into it down there. And then for like 2 or 3 days, maybe, we just kind of got stuck in between 215 and 226. And our view was whichever way the stock breaks should dictate the next move. Obviously, yesterday answered that question, firmly took it out. So we like Tesla to continue higher. It's just an individual name, independent of earnings. Otherwise, we do tend to stay away from trying to trade earnings, altogether, but we try to do like sympathy type plays. So maybe AMD and the effect it might have on NVIDIA, or, SMCI, or any of these other names that are out there. But we tend to like to take advantage of weeks like this, volatility wise, and trust that if we're on both sides, that we're going to catch the win, as I like to say.
I mean, you talked about, the market's tendency to kind of give hints about the FOMC meetings, like whatever it's doing kind of before then, and it is usually giving hints. Do you feel that way about earnings ever? Like if you look at AMD's chart here, it's not looking great into this earnings report. Do you think that increases the likelihood that the report's not going to be great? Or maybe not even the report, but that the reaction to the report, it's not going to be great?
Absolutely. Love that you said that, Aaron, because it is the reaction, right? I'm sure we've all read great reports, reaction is bad. Awful reports, reaction is good. So you're absolutely correct. And yes, although again, like anything else, not perfect, there are those times where, to me, it looks like the market has tipped its hand a little bit about, okay, we want out of this before earnings, or we want into this. And I couldn't agree with you more. AMD doesn't look good. Then there's also the kind of the generic mantra, right? Good things tend to happen to good stocks, not necessarily companies, right? The stock trending higher. It seems like everything is favorable on the way up, right? AMD kind of on the trend down. As you said, not looking great the past couple of days, not looking great lately. Certainly, if I had to go red or black on AMD, I'd probably going for the downside.
There you go. All right, Christian, well, coming up on time here, do you mind telling us a little bit more about what our viewers can get if they sign up to trade with you next week?
Oh, absolutely. 100% free open house. I do have somewhat of a unique approach to trading markets. I do try to keep it simple, first off, which nowadays is somewhat unique. Just keep it simple, stupid, right? Don't overcomplicate it. But I like to do things with being on both sides of the market, and, kind of work trades, that might otherwise be non-successful into successful. So it's a very, very, I think a lot of our members have taken to it, probably because it's easy to understand, easy to follow, and we profit. So the open house we're doing next week gives everybody a chance to come on in, kick the tires on it, take a look around, see what they think, all week long.
Awesome. Well, we do have the link in the chat to sign up for that. I'll go ahead and post that in the chat. Sorry, the link is in the description right now. I'll post it in the chat as well, just to make it easy. We also have that QR code on the screen right there. Christian, always great to have you on. Enjoy the rest of your Tuesday. Happy trading and stay green.
You bet, guys. Thanks. See you next time.